Hello and welcome to TA for Traders. It's Monday the 12th of June and I'm Nigel Croft. In this short video we'll be looking at the charts on the NIKKEI-225. What we'll see is that perhaps in the short term there may be some consolidation. Certainly on the 4-hour chart it looks like a drifting pattern, and likewise on the daily there is some downside momentum coming in. On the weekly chart, the picture still looks okay, and in fact a consolidation could be a reverse head and shoulders, and if that is confirmed, obviously for the longer term we will see further upside. So here we have the daily chart, and you can see that the index has come back to the 20-day moving average and has found support. That was at the close today. In fact, we virtually closed marginally above the 20-day. Index closed 19,842 and the 20 days rising at 19,826.5. So we're at a support level. Below there you can see that the 50 days rising as well, just below 19.5. But the drifting pattern has caused the downside momentum to increase. You can see we've got a downtrend in the RSI. It is still above 50, so still positive. And you can also see that the MACD are rolling. They're not yet shouting sell, but there's a warning that they're on amber. There's nearly a warning sign coming out there. I mean, on this chart, you've still got the pattern of higher lows and higher highs, so we're still in an uptrend. That would need to break the low of the 30th of May, which is round about 19,575, to break that uptrend line. So be aware of that level. Otherwise, as I said, consolidation, move back to the moving average, losing momentum, but it's still, I would say, positive until we break that support level. Looking at on the shorter term, this is the 4-hour chart. Now here you can see that the short-term pattern has been broken of the uptrend. We've broken down through the moving averages. 20 did cross the 50, but the 50 was still moving upwards, so that wasn't a bearish sign. It just means we've still got the resistance from the 20 if we were to bounce. That's at 19,971. We're coming back to the support of the 200 day, and below there you can see this band of trading that we had on the 30th of May, around about 19.7. That would give support. Here the RSI has gone below 50 in a downtrend, and the MACD are starting to flash red, a warning sign, sell signal coming out there. So on this, one would expect further consolidation, maybe back towards that 200 4-hour moving average. However, looking at the longer term, you can see that the pattern is still positive. We came down below the 20-week moving average, moved back above. If we actually did have a consolidation here, which the short term seem to be saying, this we could get a reverse head and shoulders with the left shoulder, the head, and then the right shoulder here. If that is the case, then the picture's still positive, and one would expect a rise to the upside. On here, you can see that the RSI just starting to create a downtrend, but the MACD are flat lining. So really, I would say this chart is still positive for the longer term. Looking at the support resistance levels for the Nikkei, resistance 1 is at the 20 average from the 4-hour chart, 19,770.6, and then 2249.6, with the support coming in at 19,753, which is the 200 4-hour average, and below there we've got the rising 50-day 18,293.8. So that's been TA for traders, having a look at the Nikkei. A bit of a mixed signal coming out, which I don't like, but one should expect consolidation short term, but the longer term picture does remain positive, and keep your eye on that support level that I mentioned. Thanks for watching TA for traders. This was Monday the 12th of June. Please remember, these videos are not investment advice. They're just my own opinion and for educational purposes only. Many thanks.